In today's show, the Bitcoin bulls may win big as two key moving averages prepare to cross. Quoting Dave the Wave, Bitcoin 1-year moving average now crossing the 2-year moving average as per the corrective phase after a speculative run up. Looking good from a technical perspective, no matter the sentiment, those buying these levels have previously done well. And quoting Miles J, big expansion on the pi cycle top moving averages, getting back above the orange line is crucial for the bulls. And quoting venture founder, Bitcoin below the 200-week moving average again. The amount of FOMO we saw on crypto Twitter in the past 2 weeks during the $25,000 rally is unprecedented. This bull trap almost has to play out. Also in today's show, a bullish Bitcoin trend reversal is a far-fetched idea, but this metric is screaming buy. Quoting Big Smokey, stocks and crypto clearly risk off until we hear the Fed perspectives coming out of the Jackson Hole this weekend. Bitcoin price continues to range, but looks a bit soft. Also in today's show, bullish Bitcoin on-chain signal flips for the first time since August 2021, according to on-chain analyst William Clemente. Quoting him here, Bitcoin's hash ribbons have flashed a buy signal for the first time since August 2021, marking the end of a 2+ month-long period of miner capitulation and deep pressure on miners' margins. Also in today's show, one indicator is likely to determine whether Bitcoin stays in a bear market, says crypto analyst Benjamin Cohen. That's right, Cohen says the dollar index has been in a general macro uptrend since 2008, and he also knows Bitcoin bear markets have tended to correlate with the dollar index's sharp moves to the upside and vice versa. Also in today's show, here's the worst case scenario for Bitcoin in the next 10 years, according to macro guru Raoul. Powell goes on to recount his observations of being an early Bitcoin investor when the asset was still valued well below $1,000, noting that he believes Bitcoin will ultimately be worth $100,000 at a minimum and can even go as high as $1 million. And quoting Lark Davis, Bitcoin is already making its first steps as global money. Now imagine where we will be in 2030. $1 million BTC is not a fantasy. It is simply a question of time. Facts. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. I also do a $50 Bitcoin giveaway every single day. And the winner from yesterday's episode is James Bissett. Congratulations. He wrote the following comment. Thanks again for a great and concise show. I always try to catch the full episodes on YouTube. The shorts are a great way to catch up if I fall a day or two behind. Keep putting in that work. Thanks, JV. Congrats on winning $50, James, and congrats on having the comment of the day. Please post your Bitcoin address on the About Me section of your YouTube channel so I can send it to you. Cheers. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you subscribe to the channel. Will Smith, that like button, and drop a comment below, and a comment will be selected in tomorrow's episode. Best of luck. All right, welcome back to another episode of Crypto News Alerts. This is podcast episode number 1027 of the Crypto News Alerts pod. I'm your host, JV. How's it going, my crypto fam? Bitcoin lost the key bear market trend line last week as it shed almost 12%, but other chart data offers a silver lining for the bulls. As noted by popular Twitter account, Dave the Wave on August 24th, long-term moving averages are about to repeat classic bullish behavior. Bitcoin disappointed over the weekend as it put in lows not seen since the end of July. Since then, $21,000 has offered only weak support, and fears abound that new lows are incoming. And one of the casualties of the downturn was the 200-week moving average. Data from Cointelegraph Markets Pro and TradingView shows a level which had flipped from resistance to support a month prior, now back overhead and unchallenged by rebounds this week. The 200-week moving average offers a verdict on the current lack of strength in Bitcoin. Quoting venture founder, Bitcoin below the 200-week moving average again. The amount of FOMO, fear of missing out, we saw on crypto Twitter in the past 2 weeks during the $25,000 rally is unprecedented. This bull trap almost has to play out. And observing behavior of the 50-week and 100-week moving averages, however, suggests that all might not be lost. That's right, in his Twitter thread, Dave the Wave shows that the former is about to cross over the latter, and in the past, this has been followed by sustained price growth. Quoting Dave the Wave, Bitcoin 1-year moving average now crossing the 2-year moving average as per the corrective phase after a speculative run-up. Looking good from a technical perspective, no matter the sentiment, those buying these levels have previously done well, which you can see here in this chart. And he also added that 5 months prior, the same pair of moving averages had correctively assessed the incoming market downtrend. We saw Bitcoin hit a macro bottom of $17,600 in June. And here you can see the Bitcoin 1-week candle chart. There is more than one moving average average-based chart mechanism flashing a bottom signal this summer. It's the classic pi cycle top indicator, which has caught macro bottoms throughout Bitcoin's history, which was already turning green in July, lending weight to the idea that June's $17,600 low really was a multi-year floor. Now, in an update on the pi this week, commentator Miles acknowledged that the bulls needed to clear the higher levels to keep the status quo favorable. Quoting him here, big expansion on the pi cycle top moving averages, getting back above the orange line is crucial for the bulls. And before I break down next story of the day, a bullish Bitcoin trend reversal is a far-fetched idea, but this metric is screaming buy. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin barely correcting and in the red, trading at $21,400. We have Ether up almost 2% for the day, trading above $1,652, while Binance Coin, Solana, and Polkadot all correcting and in the red, while XRP and Avalanche are also pumping and in the green. But all right, now let's break down our next story of the day. Bitcoin price remains pinned below $22,000 as the lingering impact on the August 19th sell-off at $25,200 continues to be felt across the crypto market. According to analysts from on-chain monitoring resource Glassnode, Bitcoin's tap at the $25,000 level was followed by distribution as profit takers and short-term hodlers sold this price and countered a trendline resistance following a 23 consecutive day uptrend that saw Bitcoin trading above its realized price at $21,700. The firm also noted that the total inflows and outflows to all exchanges metrics showed exchange flows at a multi-year low and back to late 2020 levels, which reflects a general lack of speculative interest. As Big Smokey shares here, stocks and crypto clearly risk off until we hear the Fed perspectives coming out of Jackson Hole this weekend. Bitcoin price continues to range, but looks a bit soft. And from a higher time frame perspective, Bitcoin's current price action is simply a continuation of its near 3-month-long chop in the $18,500 to $22,000 range. But the real damper on sentiment is persistent non-crypto related concerns in the US and global economy. On August 25th, which is tomorrow, the Jackson Hole Economic Symposium begins, and from this, the public will learn more about the Fed's perspective on the US economy. It plans for futures interest rate hikes, whether the inflation target remains at 2%, and if the Fed thinks the U.S. and global economy are in a recession. Anticipation over the symposium has clearly made investors skittish, and these frayed nerves are visible in the S&P 500, Dow Jones, and crypto markets this week. Quoting the CEO of EXMO Cryptocurrency Exchange, it appears there is no single driver for the recent decline. The global crisis continues, and it is not certain where the bottom is. Inflation is forcing people to get rid of their investments and get cash to cover daily expenses. In many countries, the total amount of credit card debt is breaking in new record highs. Recent data shows that COVID isn't gone and geopolitical tension further adds to fuel to the global market's decline. Ethereum, on the other hand, appears to be showing some upside promise from a technical analysis point of view. Last week, the asset corrected alongside Bitcoin and endured a few blows related to centralization fears after the Office of Foreign Assets Control sanctioned Tornado Cash, and the crypto community grew fearful over potential outcomes of the proof-of-stake transition, making the network susceptible to censorship and regulation. Now, generally, the bullish merge narrative remains in play, and the large cup and handle pattern seen on Ether's daily time frame, plus the bounce off the $1,500 level, are enough to support traders' dreams of ETH price rising to the $2,500 to $2,900 range. And Ether looks similarly juicy in its ETH/Bitcoin pair, which bounced off support at the 0.073 Bitcoin range. But for the time being, Bitcoin short-term prospects are less than optimistic. But Jarvis Labs resident analyst JJ pinpointed a key on-chain metric that suggests Bitcoin is trading in a generational buy zone, as outlined here in this chart. According to JJ, Bitcoin's market capitalization versus realized cap indicator is printing a reading that is extremely low. As pointed out here, does this mean that investors should go out and put every last penny into Bitcoin? Probably not, but as the MVRV chart shows, which I just shared, dollar cost averaging into Bitcoin when its on-chain and technical metrics hit extreme lows has proven to be a profitable strategy in the last 3 bull markets. That's right, so BTFD, buy that freaking dip. And before I break down next story of the day, bullish Bitcoin on-chain signal flips for the first time since August 2021, according to on-chain analyst Will Clemente. But first, let's take a quick look at the overall crypto market cap, sitting just above that $1 trillion milestone with $68 billion in volume in the past 24 hours. The current Bitcoin dominance is 39.8%, with the Ether dominance at 19.5%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Helium leading the pack at 15%, trading at $7.59, followed by Chili's up 11.5%, trading at 24.5 cents, followed by Nexo up over 8%, trading just under 99 cents. And checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of red for the altcoins, which is a handful in the green, including Ton up 19.5%, Chili's up 11.9%, and EOS up 10.3%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated at 25 in extreme fear, yesterday at 28, last week of 41, and last month of 30 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. Popular on-chain analyst Will Clemente says an important Bitcoin metric has flipped bullish for the first time in a year. Clemente tells his almost 700,000 Twitter followers that a shift is taking place for Bitcoin and its miners. Quoting him here on Crypto Twitter, Bitcoin's hash ribbons have flashed a buy signal for the first time since August 2021, marking the end of a 2+ month-long period of miner capitulation and deep pressure on miners' margins. Bitcoin hash ribbons attempt to identify periods of time when Bitcoin miners are distressed and could be capitulating. According to on-chain analytics firm Look Into Bitcoin, Clemente notes the indicator is based on moving averages of hash rate, which he says is of course dependent in some capacity on price for profitability. Quoting him here, there have been several mini capitulation periods, see for yourself below, but hash ribbons have offered good signals overall. I like them because similar to the Pure multiple, they are simple and based on principles around miner profitability. This indication means miners are plugging in again, raising Bitcoin's production costs. So there you have it. While the hash ribbons for Bitcoin are suggesting easing selling pressure for miners, Clemente warns that the US dollar currency index is in a strong uptrend. Quoting him here, DXY screaming higher, can't even draw a proper parabola, looks too ridiculous. And popular crypto analyst Benjamin Cohen notes that Bitcoin has historically been inversely correlated with the US dollar currency index, as he shares here. Now, a lot of times when you see the dollar is going up, it's sort of like a wrecking ball. It makes most other things go down. Generally, you can view it as people fleeing into the relative safety of the US dollar. And before I break down next story of the day, one indicator is likely to determine whether Bitcoin stays in a bear market, as well as I share with you the worst case scenario for Bitcoin in the next 10 years, according to macro guru Raoul. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel, turn on all notifications, Will Smith that like button, and drop a comment below, and a random comment will be selected as the winner on tomorrow's episode. And of course, you can follow me all across all the major podcasting platforms, from Spotify to Apple's iTunes, and all across social media, from crypto Twitter, Facebook, Telegram, Instagram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. Popular crypto analyst Benjamin Cohen thinks one indicator is likely to determine whether Bitcoin stays in a bear market. In a new strategy session, he tells his 764,000 YouTube subs that Bitcoin has historically been inversely correlated with the US dollar. The US dollar currency index measures the value of the dollar against a basket of 6 foreign currencies. Cohen says the dollar index has been in a general macro uptrend since 2008 and notes Bitcoin bear markets have tended to correlate with the dollar index's sharp moves to the upside and vice versa. Quoting him here, the general relationship, as we've discussed, is that as long as the dollar is going up, we can expect Bitcoin to more or less stay either in a bear market or at the very early stages of its accumulation phase, which you can see here in this chart. And at the time of this recording, Bitcoin is trading at roughly 21,500, so the top-ranked crypto asset by market cap is down more than 16% in the past 5 days. Meanwhile, the US dollar currency index is up around 2.3% this week. So there you have it. And now let's break down our final story of the day, the moment you've all been waiting for. Real Vision's CEO, Raoul says that Bitcoin can still erupt en route to outperforming other asset classes in the next 10 years, even in his worst case scenario. That's right. In a recent roundtable discussion on the Scott Melker YouTube channel, the former Goldman Sachs executive explains how more extreme an asset's inherent volatility is, the higher it could potentially multiply in price compared to less risky investments. Quoting him here, volatility gives the reward because it's a 70 vol volume asset, it gives these 20x, 50x, 100x rewards depending upon what time period you're looking at. People are just not set up for that because they are mean reversionists. They think the world is cyclical and everything reverts back to where it was. So therefore, every boom has a bust and every bust brings it back to where it started. But that's not what happens here. It is an exponential trend. So every bust is significantly higher. I mean, Bitcoin $4,000, Bitcoin $20,000. That's low to low. That's extraordinary. But people don't see that. They are not used to it. They don't know how to deal with it. People are having to learn. All of us did. Powell goes on to recount his observations of being an early Bitcoin investor when the asset was still valued well below $1,000, noting that he believes Bitcoin will ultimately be worth $100,000 at a minimum, and even go as high as $1 million per coin, as he shares here. I never realized how in an exponential trend, buying and holding and adding into the big sell-offs is better. I went back and looked at all the times I traded Bitcoin from 2013 when I first got in at $200. I wrote it up to $1,000, so it went up 5x in 2 months, then went all the way back down 85%. I just held it because I wanted to treat it like an option. I had a 10-year view. I said it's probably going to $100,000 worst case, $1 million best case over the next 10 to 20 years. Let me know if you agree or disagree with the macro guru. Now, Powell concludes by making mention of his other crypto investments, including leading smart contract Ethereum and competing layer 1 protocol Solana, as he shares here. I have a few different tokens. My main bets are Ethereum and Solana, but I have no idea whether Solana is going to be something or not. I think it probably is because the network adoption seems to be as high as anything else, but the world can change fast. Outside of that, I have a basket of equally weighted stuff because I assume I'm an idiot and don't know how to choose the right things. That's why I set up a fund of hedge funds, because I'd rather give my money to a bunch of people whose job is to go and find what is the next 100x or 1000x than try to do it myself because it's complicated. Just a small basket of stuff just to keep my eye on it all, see what's moving, see how it works. So there you have it. And to watch this video interview between Scott Melker and the macro guru Raoul Powell entitled Crypto Contagion Over, Can the Ethereum Merge Spark a New Bull Market? Check the show notes below the video in the description. And quoting Lark Davis, Bitcoin is already making its first steps as global money. Now imagine where we will be by 2030. $1 million Bitcoin is not a fantasy. It is simply a question of time. Touche. Now for a quick recap, what I cover with you here in today's show: Bitcoin bulls may win big as two key moving averages prepare to cross. Also in today's show, I shared that a bullish Bitcoin trend reversal is a far-fetched idea, but this metric is screaming buy for the first time since August 2021. Also in today's show, I shared one indicator likely to determine whether Bitcoin stays in a bear market, according to crypto analyst Benjamin Cohen. And we also discussed the worst case scenario for Bitcoin in 10 years, which is $100,000, and the best case being $1 million per BTC. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Freddie Jones wrote, JV, thanks for the daily updates. I'm loving the predictions of Bitcoin. Although I don't own a full Bitcoin, I'm happy that I own a fraction and keep dollar cost averaging each pay week. As Wise Man once stated, it's better to own some of Bitcoin than to not own any at all. Hodl, wise words, fam. Much love. Our next featured comment comes from Pifux, who wrote, great show as usual. You have been the first podcast I've been listening to since March 2020 and still listening to every day. Keep up the great work. And our third and final featured comment comes from Cub J. JV, just valuable. Once again, thank you for the daily dose of value, kind sir. Love accumulating during the bear market. Hit that Will Smith smack for you. There you have it. And to be featured on tomorrow's episode, drop a comment below and you'll automatically be qualified to win $50 in tomorrow's $50 Bitcoin giveaway. I wish you all the best of luck and I look forward to seeing you on tomorrow's show. Peace.